FOMC today led to the S&P 500 and the NASDAQ bouncing pretty aggressively. Now, we need to understand what exactly Powell said and its implications for the market, because in my opinion, from the outside looking in, it looks like he was hinting towards stagflation. However, what I will say is if we start to break some of these levels, you have to get off the fence of being a bear, because there's real implications that a bottom could possibly be put in, and you have to be open-minded to being wrong as far as more downside to continue. But I'm going to present two ideas and two scenarios of what's taking place right now. Personally, I lean more towards a rejection in the short term. I actually ended up going short near the end of the day, and I'll explain everything here in the video. Let's get to work. So a few things that I want to address, right? We're FOMC. Let's talk about this first. I'm going to skip ahead of the charts. You can do that also. Now, basically what Powell said, I was live here earlier. You can go watch my live stream, skip ahead all through it if you want, where we listened to Fed Powell. I gave my viewpoints on it at the end as well. Okay. Basically what Powell said is everything that we thought he would say. There's no reason to cut rates anytime soon. They said, are you going to cut rates going into summer? He said, there's no reason to talk about that. We have no implication or reason to cut as of now, which is kind of concerning. So again, basically what he said there. Now, what he also said is you're already seeing inflation being impacted by tariffs. He said we saw goods inflation already starting to be impacted from that. Now, the weird part of that is he's saying that was impacted in January and February. That doesn't really line up with the impact of tariffs that we've already seen being put in place, which came after that. So I struggle to understand where he's coming from, unless it was just markets pricing in tariffs to come. Doesn't really make sense. Someone asked him about it and he kind of like didn't really answer it directly. Maybe I missed it. Maybe it was over my head. It's in the live stream as well. So that's important to understand. Now, it's important to understand what the Fed sees happening. As of right now, you have unemployment, which is steady, very low, around 4.1%. Okay, number one. Number two, the market is slowing down its growth. You're expected to slow down. He did say today that the Michigan data that we've been tracking is an outlier. That's the one that's an outlier. However, they have been pretty accurate over the 2-3 years. Important to understand that. And then the other one going into there of what's happening with tariffs and the expectation for inflation moving forward. Because if you look at the dot plot of what they expect at least 2.5 cuts, I believe, by the end of this year. And I think another 2 in 2026. Now, that is subject to change. Like they've been saying, that really hasn't changed at all over the past few weeks, right? What's important to understand is that they anticipate inflation to pick back up, right? And so the question for most people there were like, why would you cut rates if you anticipate inflation to pick back up? And again, he leaned more towards the idea of not really knowing how to move forward based on the impacts of what's coming with Trump's tariffs. And again, it was a game of cat and mouse back and forth. I had a few articles, a few things I posted. I'll repost these also too on Twitter so you guys can see. If you go follow my Twitter, link is down below. I retweeted all these really quick for you. And again, it's all going to be there so you guys can see. But again, underlying inflation before tariffs was basically at 2.5%. Again, starting to rise. Tariffs tend to bring growth down and inflation up. That is the definition of stagflation. I want you to understand that. We'll come back to that here in a second. Broadly speaking, forecasts point to weaker growth, higher inflation, which call for different responses and cancel each other out. Again, what he's talking about, the forecast, even though he's leaning and says Michigan is an outlier, he's still identifying and saying that, guess what? The forecasts still point to what? A stagflation standpoint. Now, I'm not saying it's going to be a long period of it, but I'm just saying based off of what the Fed is saying, that is the definition of stagflation. And then the University of Michigan expectations or readings were an outlier, right? In comparison, meaning, again, he said they're kind of right with the expectations, but theirs were a little bit over the top in the expectations, if that's the way to put it. Maybe they were too dramatic, is how he was trying to put it. So again, worth mentioning. So as I go into this meeting, and despite seeing upside on the market, I'm bearish here. Flat out bearish. I don't like it. I don't like it at all. Now, again, I want to go through one thing really quick for you guys as well. What I mentioned today in Discord, okay? Now, again, these are all the levels you're going to notice when we come back into NASDAQ. You see this rejection right here at 20,001.2 before market even opened. Again, before market even opened, we called this out this morning, 812 right here. NASDAQ sitting over VWAP. If you can break over 19.8, we're looking for a push into 19.92 and then 20,020 and then 20,120. Look at where you pushed up to. Look at every resistance. 20,020, 20,120. Again, And then right here, 19,920. Every single level was where we found resistance and ultimately rejected near the end of the day. And you actually ended the day right there around 19,920. If you're interested in Discord trading with us, everything that we're doing throughout the day, getting updates on our option trades, futures, everything like that, the link is down below. You can see some of the wins from the day for the people. Again, I didn't trade a lot today. I did end up taking a short at the end of the day. We'll talk more about that in a second. But again, optiondrops.com as well. The link is down below. You can check us out if you want more information. So what we're looking at, and also too, we are going to be locking up the more affordable tier the starter plan. So that probably gets locked up in the next 2 weeks. We had a set amount that we wanted to achieve. We're basically there. I wanted to just let people know if you want to get into it while you can. 2 weeks from now, maybe even by the end of the month, it's the 19th, probably by April 1st, we're going to end up locking starter plans. So if you're interested, try it out if you want. Okay. Now, going into equities and futures, you can see again that we're rejecting seeing that type of action. Now, the other interesting part of this, right? So in order, again, you don't need crazy high volume to get a reversal, right? Now, what's interesting to me is I expected good volume. I expected good volume today either way, up or downside, right? Because it was FOMC. And historically, FOMC brings in great volume, especially in comparison to the Monday and Tuesday prior to that meeting, right? Now, what's funny is you didn't get that action here today. Very low action on SPY. I would say minuscule. There wasn't a lot of buying pressure, even despite most of the pressure coming during the meeting or after. It's worth mentioning. And the other part of this that's really interesting that just makes me think, and I'll go into the bull case here in a second as well, is you push up into that level, the meeting ends, and then you basically just drop. Like you just sell after the meeting. So the whole time Powell's talking, you're moving. He stops talking, you drop. That's how this really took place and happened today. Very important to understand that. So what I'm looking for here to really get bearish, really get bullish, really quickly. Now, number one, what I minimum want you to see, or what I want you to do, is holding above your previous March 7th lows, right? 2 Fridays ago, right? You're still holding below that level. You cannot hold or close above that level. Important to understand. Now, to get really bearish, what I would like to see is us to break this kind of structure, how we're making lower highs here currently. I would like to see us break, retest, continue down towards 19,000. Now, that's a ways off. Right, that is a ways off. What I would think would still suffice and be very important to see is if we can start to see downside underneath 19.7. Also very, very, very important. I want to make that really clear right now. 19.7 is basically the 19.5 of the previous contracts. If you guys remember, it's kind of at that midpoint. If we get back below there and if we don't see continuation from buyers up here, it's a major red flag, right? Very important to understand that as well. The next thing here that is a major concern to me, it's going to SPY as well. So you can see SPY levels. SPY continues to reject right at our level. Again, we talked about it yesterday. You come into your 200 SMA and you're just rejecting. Now, again, we could mount over this tomorrow. We'll see. You have OPEX, all that stuff happening this week. But I'm still looking at this from the viewpoint of we still have done nothing from a technical viewpoint. Yes, we bounced, but you get continuation. You get this move into a breakout and then you stall, you die, you get no actual move, you get no continuation or follow through on that. And then to top it off, your volume is abysmal. It's like, I don't know what we're doing here with volume. This is not signifying a reversal or a strong sign of buyers. You're just reducing strength, and I don't really see it. I keep seeing this idea that we're squeezing shorts or retail's being squeezed because they're all heavy in the short. First of all, the idea that retail has more money than hedge funds is comical, but it's also worth mentioning when you look at this type of action, again, you expect if you're squeezing out of a play, if you're squeezing shorts, volume will rise because massive buying is occurring or shorts have to cover. Again, that doesn't line up the thinking. So that's my viewpoint and what I'm looking at here. And again, I'm open to being wrong. If we start to remount the 200 SMA specifically on the indexes, the NASDAQ and ES, I lean more towards upside and bouncing. I'll tell you that right now. But until then, you have to hit the brakes. You have to just say what's really going on here. Now, the next step from this too is looking at the underlying largest names and holdings in the NASDAQ and the S&P 500. Now, number one, I call it the big three, the big trifecta right now. Okay. And what I'm looking at specifically is NVIDIA, AVGO, and Apple. Now, NVIDIA today had their keynote meeting and their whatever it was, right? You push all the way up to 121. And the funniest part of this whole thing is you basically just drop down after 2 o'clock. And the final hour of trading, you go from 120 down to lows of 117. Concerning. AVGO, this is the better story on the day. You go all the way down to 186 and you bounce all the way back into like 196. That was awesome. But again, you're back below 196. This gets back below 193. Again, it's a major sign of concern. But again, you're still just sitting in the range. You're not breaking out. Again, AVGO, Nvidia, Apple are not breaking out of their trend. They're still sitting bearish. And in reality, what you really look like you're doing, again, I've been trying to paint this picture so people can see, you're trending down how you were. Now you're basing sideways. Now, typically what we look for is called a drop-based drop or a drop-based rally, rally-based rally, right? So what you're looking for, right, is you typically are moving in this type of structure to where you drop, you base, you drop, you base. That's typically how the market moves. It doesn't just go straight down. And again, I was expecting more buying from the past 2 weeks, but this is what you're getting right now. And even when you go to the upside, look at how this happens. And again, just painting a mental picture for you to understand of what you kind of look for and get a visual of what's happening here. You know, we go to like the daily chart here. We look really quickly at what's happened. See how this action occurs? You rally again, you rally, you base, you rally, kind of dip, you base, you rally, over and over, base, drop, steady, up. Again, over and over and over this happens. Now, right now, you're not getting that action. Okay, you're dropping, you're kind of basing, you're not really doing anything. You're not even getting over previous week lows. And that's the concern here, right? That's what I'm looking at. I'm like, okay, it doesn't look legit. It doesn't seem like buyers are stepping in. And if you've been on the channel for longer than a month, then you know from 2022 or 2023 to the end of 2024, I was the most bullish guy out here. Right? But when I look at the writing on the walls, it's just concerning right now. Now, I'm not saying we have a mega crash or we go down to COVID lows or I'm not saying any of that. But I'm saying in the short term, I'm not convinced that buyers are getting involved here. It doesn't seem that way. I mean, let's really look at what's happening here. Let's get rid of all the drawings so you can see a little bit more clearly. Death cross is happening most likely tomorrow on Nvidia. Crazy, it's happening, right? First time you've crossed down since 2022, right? NQ, we're getting close. If NQ bounces, you might be able to avoid it, to be honest, but it still looks terrible. You go into SPY, still got some room to go till there. QQQ, still got some room to go till there. Go to AVGO, still have some room to go to there. Apple, getting concerning, going to happen pretty soon. Overall, you'll see a lot of these names. I went more into these yesterday as well, but again, you've already seen it happen on Microsoft. Again, you go to Meta, it's curling down. Meta's been one of the stronger names out there. But again, it's just, it looks like this is starting to happen. So like you can go to Google. I think it's already happened on Google as well. Google is about to happen, right? Google curled at the last second last time, funny enough. But that's where you're at right now. So again, I just urge a lot of caution when we're looking at this market and not moving based off of emotion, right? Again, today was the first day that I actually tried to held something over. Well, yesterday I had Reddit overnight, but again, it dropped today, got out. I left a runner, but that was it with Reddit. But I'm going into the mentality of like, I like the setup here now. The risk to reward makes sense. If the death cross pays off, if sellers step in, if this is really what I think is happening, I think you have more room down. I don't think you need to get super aggressive, but I think that options are priced pretty well for some of these equities right now. I'm okay losing. I'm okay taking an L here. It makes logical sense with how we're moving though. But as I'm telling you right now, the reaction that you're getting is not good. Like it just isn't. And I look at what's happening here on the NASDAQ and it still looks like a bear flag. It still looks like all signs of continuation to the downside, right? So again, everything I'm looking at as a whole. But the real point of today's video is understanding what Jerome Powell said, because I look at this and I'm like, this went terrible. This went absolutely awful. Yes, inflation's on track. Yes, we're moving the way we want to move. But again, the real problem is what he pointed to. Slow growth, high inflation. Right? Or stagnant inflation, right? That's a issue. That is a major, major, major issue. And they're not going to cut rates if unemployment doesn't rise. You have to understand that. They are not going to cut rates unless unemployment gets closer to 5%. And right now, it's just not going up. Like unemployment's not rising. And so I just don't see a path of how this gets better. In the short term, at least, right? And again, I don't think this lasts as long as 2022. I don't think this is going to be a long pullback. But you have to understand, we basically just went up for 2 years straight. Now that you're in a dip for a month, everyone's like, oh, well, it's just February. I'm like, okay, that's kind of crazy, but whatever. You need to understand, like, it makes sense to get a pullback. It makes sense to get some sort of drawdown here, as well as when the new president is releasing an entire new economic policy, which might actually work out in the long run. But in the first part of it, he's even said it's going to cause some pain. The market's going to hit a little bit, right? He does deflect and say this is Biden's market and not my market, but it's important to understand what's taking place and the viewpoint behind the scenes as well. Is this a short-term pain for a longer-term next 3 years of success and whatever we're looking for? I think that's the goal right now. And so that's important to realize that right now, going into summers, what I really think this is going to lead to is chop and downside. So it's important to understand that. Again, you look at this action, I look at the volume, and I look at it, I'm just like, what are you like? Why are we excited about this? Like, why are we like, again, nothing has changed. It's more of the same. And I encourage people to just think about it from a logical standpoint of what's happening there. I'm not telling you to go short. I'm telling you just to actively think. Now, if you think of bottoms in, congratulations. I'm happy. I hope you make money. I really do. I hope everyone makes money on their trades. But that's my mentality here, right? If we get upside, I will flip to the upside if we start breaking out. If we start getting continuation back above the 200 SMA, I'll be as bullish as the next guy. But until that happens, you have to be cautious. There's no reason to get overzealous 1,000 points away from the 200 SMA, right? There's just no reason. You get back above that, back on all-time highs, you have 3,000 points, give or take. Why not or 2,000 points? So just be patient and 3,000, probably another 1,000 points on top of that, right? So important to understand where we're at, what's happening, overall goals, and overall viewpoints of the market as a whole right now. And that's really how I'm kind of interpreting this. Now, equity stocks I'm liking right now, I'll be very clear. I still I love NVIDIA to the downside after today. We'll see what happens. If it gets back above 119, I'd probably steer clear from any downside looks. But I mean, as it's below 118, getting below 117, I'm looking more for downside as well. Apple, I think Apple is very interesting. Below 214.8 is a level me and Jay have marked out, but also below 219, very interesting as well. We called this one out as well today, as it rejected there this morning. But again, you can see just right off your previous low there. Look at that. Look at that rejection. Look at that rejection off the level. So again, your largest names still aren't showing the continued strength that you want to see. And it might switch tomorrow, but as of right now, kind of what I'm looking at. Meta is still trying to come back down into the 200 SMA at 570, rejecting off your 586 level. Still looking there. Amazon, very weak name on the day, gap down to 190 yesterday, kind of tracked back up, came back into 195.4, filled the gap. I'd be looking for downside here again on Meta. We'll see what happens. Microsoft really doing nothing. Tesla still rejecting off of 236, looking for continuation on the downside here as well. We'll see what happens there. Also, you'd had that good news overnight about the Tesla and the EVs and what's happening there. I need to make a video on that, to be honest. But again, kind of what's going on. AVGO right back into your level 196. I mean, what else to really do here? What else to really talk about? That's where you're at. There's not an update. Again, you're right at resistance. The best thing right now that's happening is these major stocks are pushing back into resistance for the 7th time, right? And the funniest part is the NASDAQ is tracking higher while these stocks are actually tracking lower, meaning the stocks are at lower resistance levels while the NASDAQ is at a higher level, which doesn't line up and is not a good viewpoint to have overall in the market or really what you want to see at all. And again, major signs of concern. Bitcoin doing okay, back above 84K, the 200 SMA. We'll see how this reacts. We want to see strong daily closes, see what happens there. But again, kind of what I'm watching for on Bitcoin, overall market, everything as a whole. If you have questions, comment down below. I'll have more videos coming out. Hopefully after today, tomorrow, I'll be able to do more double videos going over specific equities like NVIDIA, AVGO, etc., Tesla, and then do the market rundowns as well. So I appreciate you guys. Have a good one. See you guys tomorrow.